You guessed it, more records on Wall Street. It's Wednesday, the 29th of August. Tonight, Donald Trump watches the U.S. economy grow even faster and says he's optimistic about a trade deal with Canada. Former U.S. President Jimmy Carter tells me how the world can fix its housing crisis. And after a century of business, Aston Martin, that's James Bond's car, is ready to go public. You'll hear from the chief executive this hour. I'm Paula Newton, and this is Quest Means Business. What is going to keep this market down? That's the question. Strong U.S. growth numbers put so much steam into this market. All the major U.S. markets moved higher. And of course, the NASDAQ and the S&P hit all-time highs. Here we are again, folks, with my hand chicken scratch here. I'm going for 18 there and 29 here. That is incredible. That is just this year. Now, U.S. GDP growth for the second quarter was revised up to 4.2%. That is the highest rate since 2014. You know, you can imagine President Trump was pleased with those numbers, tweeting, "Our country is doing great," and then saying this to reporters.
You know, our economy has picked up in terms of worth. There's a lot of money for everyone sitting around this table, but we picked up about $10 trillion, General, since my election. And we're doing record business, record stock market, record everything, and also record unemployment.
I'm joined now by Julia Coronado. She is the founder of Macro Policy Perspectives and formerly worked at the Federal Reserve. I don't know what you can think that your former colleagues are thinking right now. You know, this market just does not see any danger ahead. But more importantly, do you think the issue is that they see nowhere else to put their money? At this point in time, you know, it is slow but steady at the Federal Reserve, and the growth in the rest of the world just isn't looking as attractive.
That's right. I mean, part of what we're seeing in U.S. markets is that the U.S. economy is humming along. That was confirmed again with a minor upward revision to second quarter GDP. We see strong jobs growth, and the rest of the world hasn't seen it such great times. We've seen some slowdown in Asia, some slowdown in China. So relatively speaking, it does look attractive for now. Keep in mind, though, we've got a lot of stimulus under our wings from the tax cuts, and that is inherently temporary, so the party won't last forever.
And yet, at this point in time, it seems that it will. Remember the record bull that we have going on here, Julia. When you think about how you actually try and care for this economy, if I can put it that way, whether you're the Fed or whether you're Congress, I mean, we've got some real fiscal issues in this country, ones that will concern a lot of different people. And in Jay Powell's remarks last week, what I read from him was that, look, we will be a lot more cautious going forward, but the data just doesn't, it's not coming in the way we'd like it to in real time. There are still some puzzling features about the data, especially where it goes to wage growth and inflation.
Exactly. And that is what justifies the Fed's sort of gradual approach, is that so far we've seen great growth numbers, great jobs numbers, wage growth still stuck below 3%, and inflation at the Fed's target, but showing no alarming signs of acceleration. So for the Fed, that all adds up to, yes, take the punch bowl away, but very slowly just sort of dim the lights a little bit on the party, but not slam on the brakes.
Definitely, they won't be slamming on any brakes. There's been a puzzling feature to this recovery, and that is the fact that the wages, they still do not continue to grow.
Correct.
One thing we've discussed over and over is that marginalized set of workers in the United States who've been really closed off, really shut out of this economy, if you will, for so many years. Do you think that's why there isn't the wage pressure, or do you think it has something else to do even with undocumented workers, let's say?
No, I think that you've put your finger on a very important element of this. And in fact, Chairman Powell spoke about that at Jackson Hole and has spoken about that before. And Janet Yellen has been talking about it for years, which is that the labor market was so terrible during the Great Recession. A lot of people gave up and left the labor force. Would those people come back? We are seeing them come back. So that is a source of slack, if you will, that will keep downward pressure on wages until everybody that wants a job has found a job. So the labor market is great, but it's not exactly looking like it's moving into overheating territory. And that's a positive thing. We can bring back workers and into economically active status. That's good for our potential growth rates.
Now, I want to run something by you. There's been a great debate, as you know, about deregulation and tax reform policy in this country. I want you to listen to Mohammed Al-Arian, who spoke to me yesterday just about whether or not this vindicates Donald Trump's economic policies.
It's a vindication of tax reform, it's a vindication of deregulation, and it's a vindication of the hope that we'll also get infrastructure.
What do you think, Julia? Do we need infrastructure now or just too much juice in the economy?
Look, I think infrastructure has been a great idea on the table for a long time, that we haven't gone down that road. I would be a little bit more cautious than calling this a vindication. We have borrowed a lot of money. This tax reform was not revenue neutral. We sort of all agreed that lower tax rates would be a good idea, but originally the intention was let's close some loopholes as well so that we don't explode the deficit. Instead, we're going the exploding the deficit route. So we're borrowing against our future, and that will present us with harder challenges down the road. So again, it feels great right now, but I don't think you would recommend, say, for example, that your teenager follow such a strategy in borrowing against their future. So I think it's a short-term vindication that presents us with longer-term challenges. It would have been probably more ideal to go with some infrastructure spending that was financed with public-private partnerships, something that would address some deeper productivity-enhancing investment without necessarily blowing up the deficit. But call me old school.
You and me both, Julia. I am happy to be in that category with you because I would have loved to see some infrastructure, you know, those of us who use it in this country. Julia, thank you so much. We'll continue to check in with you. Appreciate it. Now, President Trump says he's optimistic that Canada will join the U.S.-Mexico trade deal and expects a breakthrough could come by Friday.
The deal we made is a fantastic deal. It's gotten great reviews with Mexico, the trade deal. Right now we call it the U.S.-Mexico trade agreement, and we'll see whether or not Canada gets into it. Otherwise, we'll do something separately, or we won't do anything, which is okay, too.
Are you optimistic?
I think so. I think Canada very much wants to make the deal, and I think it's going to be obviously very good for Canada if they do, and I think it's probably not going to be good at all if they don't.
Some more negotiating tactics there from the president. Now, those comments came as Canadian Foreign Minister Chrystia Freeland is due to meet with U.S. trade representatives in about 45 minutes from now. Prime Minister Trudeau says Canada is ready to walk away if he has to, adding no deal is still better than a bad deal.
As I said, Canada is always willing to sit down and work in a constructive and responsible way around the table. We've done that from the very beginning, and we will continue to be creative and constructive around the table. We're working now. We sent our whole team down to Washington to engage in this week's negotiations. We recognize that there is a possibility of getting there by Friday, but it is only a possibility because it will hinge on whether or not there is ultimately a good deal for Canada, a good deal for Canadians. I've said from the very beginning, no NAFTA deal is better than a bad NAFTA deal. And we are going to remain firm on that principle because Canadians expect us to stand up for them, and that's exactly what this government's going to do.
So both the U.S. and Canada continuing to play politics. The auto sector, though, meantime, it's of material importance to them, and they're watching quite anxiously. Joining me now on the phone is Ann Wilson. She is Senior Vice President of the Motor and Equipment Manufacturers Association. Now, I want to stress that you deal with all the companies, the Ford, the GMs, the Chryslers of the world, but you are auto parts manufacturers. You have a huge stake in these negotiations, though. From what you've seen so far of the U.S.-Mexico deal that Canada says that in principle they agree to, but they also have to see the details. Does that put all three countries in a better position in terms of having a more competitive car industry?
Well, first, Paula, thank you very much for having me on the show.
We are heartened by what we've seen between U.S. and Mexico on many fronts. We do think that there's a real possibility here with the regional value content and the increase that our administration, the Trump administration, sought to improve the trade agreement for all the parties. But I'd like to go back to what you started off the show on. It is really important that Canada be at the table and that this be a three-party agreement. We represent motor vehicle suppliers. We are actually the largest employer of manufacturing jobs in the United States. And our jobs have actually grown under NAFTA. So NAFTA's been good for our companies, but it's also been good for the American worker who are employed by our companies. But we need Canada to be there.
At times, President Trump does not seem to have listened to that message. He thinks that, look, if he doesn't get the trade deal that he wants, a trilateral deal doesn't have to happen. Do you find sometimes that your message falls on deaf ears when it comes to the administration?
Well, I think the president is challenging all of us in the business community to come back to them to explain exactly why something that we have come to expect in NAFTA needs to continue. And I think that the auto industry has done a good job of trying to show how NAFTA allows the United States to be competitive in a global environment. So it allows the three countries to be competitive when it's compared to Europe, compared to Japan and Asia. And that's why the three-country agreement is so important.
If there is no deal, Donald Trump continues to say that he will impose tariffs on cars coming in from Canada into the United States. Given the integrated nature of the auto industry that you work in, is that possible? Would that be feasible?
Well, at least feasible, but we are very much opposed to that. We build cars, we sell cars in a global environment. Most of our members are global players, but we also have a lot of manufacturers in this country who have just a facility in the U.S., but they are very dependent on all of the vehicle manufacturers being able to be successful. I'm from the South, and I say a lot of rising tide lifts all boats. And what we need to talk about here is the dependency between vehicle manufacturers and their supply base, and then the dependency on U.S. workers for those jobs. So, if we cannot be able to get parts into this country on a financially viable front, it's going to be much more difficult to make cars in this country. And if it's hard to make cars in this country, we won't employ as many people.
Yeah, and that is a very clear message there. Ann Wilson, thanks so much for your time. Really appreciate it. Now, later in the program, you are going to hear from the chief executive of Aston Martin, which has just announced it's preparing for an IPO. He'll tell us why he's actually not worrying about the threat from auto tariffs. Tesla shares closed down another 2% amid new trouble from CEO Elon Musk. Now, he may face legal action for his verbal attack on a cave diver after all. Here's a reminder of how we got here. Thank goodness. Last month, Musk offered a miniature submarine to help rescue 12 boys and their football coach who were trapped in a cave in Thailand. One of the rescued divers, Vernon Unsworth, called it a PR stunt and said Musk can, quote, stick the submarine where it hurts. In a Twitter outburst, Musk called Unsworth a pedophile. The Tesla boss later apologized, but on Tuesday, Musk tweeted that he thought it was, quote, strange that Unsworth hadn't sued him. Now it appears that is all going to change. Claire Sebastian has been following this. Thank goodness, Claire, because I've completely lost track. You're going to give us the details of what's going on right now, but at the end of the day, it's still clear that Elon Musk has a trouble actually staying focused.
Right, and staying quiet on Twitter, Paula, in the wake of that whole 17-day debacle over whether or not he was going to take the company private. A lot of investors had really been hoping to see a more restrained Elon Musk. And there were a couple of days when it looked like that might be the case on Twitter, but clearly that moment is over. This is the tweet that he put out in the last 24, 36 hours about Vern Unsworth. It was a reply to another Twitter user. He said, "You don't think it's strange that he hadn't sued me? He was offered free legal services." Well, as you said, he hasn't sued him yet, but we do have this letter that was sent by lawyers that have been retained by Vern Unsworth to Elon Musk. It's dated August 6th. They say that they are preparing a civil complaint against Elon Musk for false and defamatory statements. They say that he had no basis for calling Vern Unsworth a pedophile, and that he did it in anger, which is something that Musk himself later admitted. So all of this, Paula, yet another example of how Musk's tweets are damaging the company. And I think this is going to prompt more calls, not only for him to stay off Twitter, but also for the board to step in and keep up that search for someone to fill his #2 position and take the pressure off him.
Yeah, as you were saying, we talked earlier, the stock down 2% there. The new price targets are flying from analysts, and they say it doesn't look good. And if we can allow ourselves to focus, unlike Elon Musk. In terms of the production targets that you and I have talked about so much, Claire, people are still saying that, look, it is going to be a rough third quarter for Tesla any way you have it. And there you see a chart of what's gone on from his antics just in about the last 4 weeks.
Right, the stock is, as I said, down almost 20% from that peak, which you see off the back of that going private tweet on August 7th. The interesting thing is Paula, that the stock had risen just before that. They had produced a good earnings report. It beat expectation. Cash burn was starting to slow, and they were starting to meet those Model 3 production targets. But despite the noise and the distractions of the last month, the problems, the financial problems and the challenges that Tesla faces haven't gone away. They are still burning through cash. They are under pressure to meet those Model 3 production targets. A lot of analysts are saying that if they don't, they will still have to raise money. They have $1 billion plus in bonds that are coming due by March next year. There are real questions over how they'll make those payments. And Musk has continually said that he doesn't want to raise cash externally. I think a lot of people continue to question that. And it doesn't help that they're losing confidence. You see it in the markets today. They're losing confidence in his ability to focus on the task at hand.
Yeah, and he's going to be caught in that whole issue of numbers don't lie, and they will expect to see some better numbers. Our Claire Sebastian continues to follow that soap opera that is the Tesla story. Appreciate it. Now, a sea battle between the British and the French. I'm not kidding. This is the 21st century now I think we're in. That's not a scenario for the historical drama. It happened on Tuesday. You'll want to see this video. We'll have details coming up. And former U.S. President Jimmy Carter joins me to talk about his hands-on efforts to build affordable housing. Plus, more from him on Syria and the current president.